Good morning and welcome to the Killik & Co market update. Markets continue to be very volatile, and actually at the start of this week we had a couple of very positive days, but that rally didn't last, and on Wednesday this week US markets had their most negative day since 2020, and that was triggered by some fairly worrying retail results over in the US that we'll have a look at later. First of all, let's have a look at some market performance data for this year so far. This chart here shows the performance in percentage terms of some key indices from the start of this year. And that horizontal grey dashed line is 20% below the market values at the very start of the year. So what we can see by looking at this is that the Nasdaq Composite Index, which is very tech focused, that's shown by the pink line, that's fallen well below that 20% drop level. And then in the middle, we've got the S&P 500 Index and the MSCI World Index, shown by the green and the black lines. Those are both fairly close to that 20% drop level. And then at the top in the purple, we've got the UK's oil-heavy FTSE 100 index. And as you can see, that's only just dropped into negative territory over the course of this year so far. A key concern for markets this week has been some disappointing results from US retailers, and this quote from Target Corporation pretty much sums up the situation. They said that their operating margin rate of 5.3% was well below expectations, and that was driven primarily by gross margin pressure, reflecting actions to reduce excess inventory, as well as higher freight and transportation costs. So we've got two issues here. One is that many retailers have too much inventory, and that's because during lockdown there were many supply chain issues, and that led to many retailers building up higher levels of inventory compared to normal so that they wouldn't be caught short. However, now they've got too much stock and they're struggling to shift that at full price. The other problem is higher transportation cost, and that's a result of higher oil prices, and that means it's costing these retailers more to get their inventory to the right place. So when these results from Target came out this week, it led to a significant drop in the share price, as you can see by this chart here. And in fact, Target Corporation has lost over $30 billion of market cap since last year. And Walmart, another major US retailer, reported very similar issues in its results last week. However, one retailer that is doing well is TJX, owner of TK Maxx, which actually reported results this week as well. TJX is an off-price retailer, so it buys discounted excess stock from other retailers and sells it on to consumers. And at the moment, because so many retailers are selling off their excess stock, TJX has been able to pick up some good deals. And finally this week, there's been lots of talk about food price inflation. The UK's latest inflation figure came out at 9%, and Andrew Bailey, the governor of the Bank of England, caused some concern when he talked about an apocalyptic rise in food prices. Ukraine is certainly a factor here. Ukraine is one of the world's largest exporters of wheat, and since Russia's invasion, its Black Sea ports have been closed and it hasn't been exporting its normal levels of wheat. And another factor this week has been the fact that India decided to ban exports of wheat because it has experienced hot conditions that have reduced its supply. So these factors have caused a big spike in the price of wheat, as you can see by this 3-year chart here. The price of wheat is up from $5 per bushel 3 years ago to over $12 today. However, if we look at a longer-term chart, this one shows the price over 20 years, you can see that this rise in the price is not actually unprecedented. We had a similar rise in 2007, and that was caused by hot weather in various countries that caused a supply shortage, combined with high oil prices that made it more expensive to transport the wheat. And you can see in 2007 the spike was fairly short-lived, and we know that at the moment the United Nations is trying very hard to get these Ukrainian ports open again, and if that's successful, hopefully we will see some relief in the wheat price. Moving on to have a look at next week, we have got results out from SSE and Nvidia. That's it from us. Enjoy the weekend, and we'll see you next Friday.